Welcome back to the Commercial Property Podcast. And it is my great pleasure to welcome back our first returning guest on the podcast, Johnny Merton of Merton and Co. Johnny, welcome back.
Well, thank you for having me. I was just looking back at my diary and my calendar, and it's almost a year to date that we were last talking. So yeah, lovely to be back.
Yeah, great to have you. And I got so much fantastic feedback from the last episode that we did last summer, which basically taught. I think EPCs are feel like a bit of a dark art to a lot of investors. So we really simplified it. And of course, we've had loads of announcements and changes in the EPC regulations. So we've got loads to talk about. But before we do, could you just give us a little bit of an introduction into you and your organization?
Sure. So I lead a small niche practice in the northwest of England. We're a surveying practice focusing and specialising in the energy performance of buildings. So that includes EPCs, MEES consultations, and compliance with building regulations for new builds, domestic and non-domestic.
Perfect. Okay, great. And we will touch on domestic today, but we're mainly going to talk about commercial, aren't we? Because obviously it's the commercial property podcast. So, great. So we've been waiting very patiently. I imagine in your line of business, you've been waiting very patiently or impatiently for this new guidance to be to be announced, and it's finally arrived. It finally arrived in June. So, could you just give us a précis of kind of what's changed or what's been announced by the government with regard to, let's talk about non-domestic EPCs and then we'll talk about kind of resi as well.
Sure. So it's probably worth just a little bit of backtracking and look at the timeline. So the current regulations for minimum energy efficiency standards is EPC Band E across the board. Now that came in 2018. In about 2019, 2020, there was a consultation with the government's proposal and suggestion to raise that threshold to a band C from 2027 and then onwards to band B from 2030. We've been waiting for their confirmation of that consultation for about 6 years. That came about in June this year. But it came about in almost a half-hearted approach where they are now looking at EPC B from 2031 for buildings over 1,000 square meters. We're doing away with the interim Band C. And so everything other than buildings over 1,000 square meters stays on the current minimum threshold of Band E. So we're effectively having a two-tier market. Anything over 1,000 square meters, EPC B, everything else, EPC E.
And what do you reckon the rationale for that was, for this two-tier approach?
So in their announcement, they did say that the larger buildings, there's about 10% of buildings over 1,000 square meters that contribute to 50% of the carbon emissions. So they're I suppose, attacking the higher or the big emitters of carbon to get the bigger impact on energy savings, carbon savings.
Yeah. Yeah. Okay. That makes sense. I wonder as well whether the government thinks that people who own properties that big maybe have deeper pockets as well, or am I being a cynic?
No, I think, I had that view as well, that it's like, well, is that a bit of a cop out? Because those buildings are typically owned by institutional investors with better access to finance and funding, and perhaps have that driver through ESG to achieve more energy efficient buildings anyway. So they're already doing it. So
Yeah.
it's not like it's a big ask. Um, so yeah, we can be cynical, we can be, whatever, but I think, there is perhaps some method in their madness around that, or some truth in that as well. So yeah.
Yeah. And we were talking about this beforehand in terms of, I mean, I definitely agree with maybe over 50,000, 75, 100,000 square foot units, but that kind of 10,000 to maybe 25, 50, it probably
Mm,
is still medium-sized businesses, isn't it? SMEs who are in there. So maybe that doesn't fall in either store. Maybe 10,000 is too small. I don't know, but that will come out in the wash, won't it? But we'll
oh, absolutely.
we'll
Yeah.
see about that.
There's still a lot of detail to understand what that 1,000 square meter mark, that 10,000 square foot marker is and how it's defined.
Yeah,
And
no,
so,
absolutely.
yeah,
Yeah,
that'll be interesting
yeah,
to watch and see, because that might include more or take more buildings out of that new threshold.
yeah, yeah. No, the devil's definitely the detail on that, isn't it? For sure.
Mm.
And so domestic, so residential EPCs, what's the announcement on that one? Is it the same or is it different?
So it's more complicated on the domestic front, because we have changes both in terms of a structural changes and policy changes. So with domestic EPCs, it's all part of the EPC reform that um, we've got changes to how domestic EPCs are calculated and presented. So we're
Mm,
moving away from a single metric of fuel price to, I think, four um, metrics, with a headline metric of being fabric efficiency. And
okay.
then there's secondary metrics around heating efficiency, smart readiness. So in effect, the software is needing to change substantially in order for the EPC to present these new targets, or new ratings. How that also then plays out in the market, we have yet to find the detail. Are we going to have a two-tier system going on for a period of time? We've got a change in STAP, which is dealing with new builds, moving to home energy model, which will then have a wrapper dealing with new builds and existing builds. So the software from our DSAP, Reduced Data Standard Assessment Procedure, into home energy model standard reduced data calculation. So in effect, it's an almost like an all singing, all dancing piece of software that can be used for a number of um, uh, calculations, whether it be new build compliance with building regulations or whether it be on an existing building. Um, so yeah, there's a whole raft of changes there on the domestic front, um, and that's not due to be rolled out until late 2027. We were expecting October this year, but that's been pushed back, I think, because of issues around the software changes.
Okay. So commercial 2031,
Yeah.
resi 2020, end of 2027.
No. So right. So in terms of minimum EPC standards, the domestic EPC is EPC-C by 2030.
Okay.
Commercial EPC-B for the larger buildings over 1,000 square meters, 2031,
Yeah.
and everything else EPC-E.
Okay. Yeah.
Sorry, I went off on a tangent, I suppose, because the way that these EPCs are being calculated are totally different.
Yeah.
Commercial is just purely about carbon.
Yes.
Domestic has been just about fuel price, but that is then changing into fabric efficiency and others.
Okay. Yeah,
And
that
that's
makes
going to give a bit of a headache for residential landlords to try and get to terms with what they are needing to comply with.
yeah. Yeah. I mean, and so just pausing on that before we go back to the commercial, that fabric first is actually going to be more difficult to achieve, isn't it? I would think, than the heating led changes.
So call me a cynic. I think the change has been driven to a degree by the fact that domestic EPCs, do not recommend heat pumps.
Mm,
The government has got this rollout of heat pump technology, and the current EPC methodology, because it's all about fuel price, does not recommend it. So
okay.
move to a fabric efficiency, um, then starts to open up a different set of recommendations, because you're not just purely talking about fabric efficiency, energy price. Fabric efficiency has a bearing on heat pumps because obviously the more efficient the building is in terms of insulation, heat loss, and so on and so forth, means that the heat pump is going to deliver more efficiency, and therefore could recommend it for more modern buildings. Older buildings might struggle with that recommendation, but you can
Yeah.
still put a heat pump in older buildings.
Yeah, and from what I remember, and I'm kind of going back in my memory bank now because we installed a heat pump in a rental property. And from what I remember, to get the grant or the funding for heat pumps, you need to have a minimum level of EPC. So I wonder if there's a bit of a roundabout argument there um
Mm,
in terms of that.
Yeah, I think that's all changed. I don't. So, because yeah, we've got a number of or there's been a lot of changes around grant assistance and support, financial support for residential landlords. We had the renewable heat incentive, which
Yeah.
was all about having no recommendations for improving the insulation measures. Moving on to what we've currently got is the boiler upgrade scheme, where that's essentially about trying to move away from fossil fuel and decarbonize homes. And you get a £7,500 grant for
Yeah.
a heat pump. There's no other criteria other than just a requirement for moving from a fossil fuel heating system to a heat pump.
Okay.
Um, and then obviously there's air conditioning, so cooling and heating, aircon. Um, uh, I think that's £2,500. And if you're moving from oil or LPG, you might get £9,000 to move to a heat pump wet system. So replacing your oil boiler with a heat pump,
Okay.
central
Okay.
heating. So
Yeah.
yeah, lots happening, lots of changes. And trying to keep up with all of it is, yeah, it can be quite challenging.
Yeah. Yeah, I suspect the dust has to settle on some of this stuff, doesn't it, to kind of really look at the implications of it as well. So,
Yeah, and I suppose there's an element of letting the dust settle, but also not leaving it too long,
mm,
because the moment that it's like, I now know what I need to do, it's like, oh, running out of time. And then trying to find the you know, the materials, the labor, you know, people to actually implement all of this work,
yeah,
that is inevitably going to be needed, is
yeah.
could be challenging and
No,
costly.
it's a great point, and definitely, kind of raising up to the strategic level, kind of looking at portfolio in the light of this is really, really important, isn't it? And kind of also buying decisions as well. But we'll hold that thought. We'll come on to that in a minute. So, but just to go, so let's pivot back to commercial, where I'm definitely on more comfortable ground. In terms of so the methodology, because we talked, and by the way, if the listeners haven't listened to your podcast when you came on as a guest last time, please do. We'll put a link to it in the show notes so you can listen to it because it's useful context for this discussion. So we talked last time quite a lot about the methodology for calculating commercial. Will that have changed? Is it still kind of carbon led, or it's just the same really?
Carbon led, and in fact, it is just purely about carbon. The government did their sort of consultation and proposal just recently is that isn't changing. So through the EPC reform, um, so what might change is the way that the notional building is calculated. So the notional building is effectively a hypothetical building that is used as a comparator. So you need to compare your actual building with a comparison, and that's what helps get your ratings. And obviously and a reference building. Um, U values. So it could be that U values might change. Now, in June 2022, when the last revision to EPC methodology occurred, that and when there's a change in building regulations, so building regulations Part L or approved document L, when that is updated, then the EPC methodology is updated
Mm,
because they go hand in hand.
yeah.
Because you've obviously got you need the EPC as part of a compliance tool for building regs. And it's effectively the same methodology is used to spit out an EPC on an existing building. So we had a change in both the carbon intensity and fuel in the last iteration, which effectively meant that or reflected the lower carbon intensity in electricity due to the way that electricity is produced, more renewables, so it reduces that carbon intensity. And fossil fuel was obviously seen as more carbon intensive.
Mm.
So what that meant is that had an impact on EPC ratings that were certainly in commercial buildings, that if you didn't have fossil fuel in your building, you had a big spike in an improvement in your EPC rating, because we're just talking about carbon. So we just removed a hell of a lot of carbon out of the calculation engine
Yeah.
by reducing the carbon intensity in electricity. Conversely, buildings with fossil fuel heating had a dampening effect. So you therefore had to spend a lot more in trying to offset that carbon, unless you remove that heating system. Then you had to think about how you're going to replace that heating system to satisfy the needs of your tenant. At the same time, we had changes in the U value, how the notional building and the reference building were sort of constructed, if you will. In the next iteration, which is March 2027 of Part L, we're not seeing as significant a movement in U values. In fact, U values are staying the same.
Mm.
I think we've got to a point where the walls can't get any thicker. We've put enough insulation in the walls, certainly from a new build point of view, that it's now just purely around carbon intensity and fuels, and what sort of fuels are going to help with improving the energy efficiency, meet compliance with building regulations, meet compliance with EPC standards. So yeah, there's nothing fundamentally different in the way that commercial EPCs are going to be calculated moving forward.
Okay, no, that's super helpful. And we talked last time about how if you had a pre-2022 EPC,
Hmm.
it was always worth getting that redone because of this
Yeah,
recalculation and how in the carbon. So
yeah.
definitely sort of pre-2022 EPC, consider getting that done because you might just see a hike anyway. Um,
Mm.
and obviously, there's in some buildings, there's relatively straightforward ways of doing this. So, for example, buying a industrial building where there's space heaters, gas space heaters, and just taking them out. I've seen a massive hike in EPCs as a result of that. So there are some. This is where you need an expert in your court, like you, don't you, to help you with these things.
And I would say, an expert in terms of EPC and lease and people that understand that side of things, but also you'll need somebody that understands landlord and tenant law, um, because just removing the heat, landlord turning up to the tenant and saying, mate, I need to remove your heating
Yes.
because it's affecting my EPC score. You can't just do that.
Yeah.
There's rules and regulations around protecting the tenant, and and if you were to do that, then surely the tenant's in their right to sort of turn around and go and ask for a discount in their rent.
Yeah.
Um, so it has to be balanced. And I think it's what we've been saying in our sort of 2031 Meets newsletter campaign or series, where it's not just about chasing the EPC grade. You have to look at the building in a holistic way. That it's not just about compliance. Compliance is one thing, absolutely, but there are other aspects to consider that um, that could affect value, um, could affect the marketability, the lending, um, a number of factors. So yeah, but yeah, fundamentally, remove the heating from a fossil fuel heating from a building. You're removing all that carbon. So yes, your EPC rating is going to improve.
Yeah. Yeah.
With
No,
it.
absolutely. And I was referring to an empty building rather than going bundling in
Oh,
there
yeah.
and removing from a tenant. But absolutely, you're
But
you're bang
but
on.
the point might still be the same. You know, you're then putting out to the market a building that's unheated.
Yes, exactly.
How does that impact on its asset value?
Yeah.
Um, and then, you know, inevitably the tenant then comes along and says, yeah, we'll take it, but, you know, request for an alteration to introduce heating. So how
Yes.
do you then deal with that? You know, you can't refuse it unreasonably. Yes, you can accept it, um, but then you've got to factor in how you're going to manage that from a dilapidations point of view. So you're then not captured by either EPC regulations moving forward or me standards moving forward. So
Yeah.
yeah, having an EPC assessor in your corner, but also somebody with you know, lease and landlord and tenant um, knowledge and expertise. Absolutely.
No, totally agree with that. And, and I would just say to everybody listening, don't do anything until you've had that advice, because it's easy to rush in and make changes, which
Mm.
seem like a immediate spike in the short term. But as you say, that, if it's unlettable because it hasn't got heating or whatever else, then obviously that's, that's not good. So, there's definitely a balance between these things. Okay. So, let's move on to exemptions, because there's always a devil's always in the detail, isn't it, in
Hmm.
terms of these things. So at the moment, there's quite a lot of exemptions to, if you can't tick certain boxes or whatever, then you can register exemptions on the exemption register. So let's talk about non-domestic to begin with. How's that changed? Have the number of exemptions increased, or kind of what's different?
And thankfully, nothing's changed. And I say thankfully because there's so many changes going on, and that remains a constant. So
Yeah.
you've got your, and I can't remember how many there are. There's your 7-year payback, which is probably the most common lease exemption that would be applied for. So effectively, that is if your energy efficiency improvements do not pay back within 7 years, and there is a formula within the regulation, so it's not just, you know, you make up the formula. There is strict guidance around that and how to calculate the 7-year payback. So if it doesn't pay back within 7 years, it means that you can continue to rent out that building even though the EPC is below standard.
Yeah.
Okay, so you're still legal, you're compliant, you're not going to get that fine. Um, there's obviously a whole host of issues around that in terms of, well, you know, who's going to want to rent a building that is substandard, that potentially has high costs of you know, running costs and this, that, and the other. Is it going to be marketable? Is it going to be lettable? Yeah, lettable. Is it going to be fundable? All of these sort of things. But at least, you know, you can still be compliant without having to shell out a load of money on a building that perhaps isn't worth spending a load of money on.
Yeah.
You've then got the non-consent exemption. So that non-consent could be your tenant saying, over my dead body, are you going to change all the heating, the lighting, and this, that, and the other? It could be that it's a planning condition, or it's because it's a listed building. And, you know, no, you're not going to put EWI on this building. No, you're not going to put solar panels. No, we're not giving you permission to do anything to change the look and feel and the character of that and appearance of that building. So you can, but you need evidence. And the 7-year payback, again, it's all evidence based. So you need your quotations from contractors
Mm.
to then plug it into the formula to then upload all that documentary evidence into the EPC exemptions register, MEES exemptions register. You've got an exemption around if the measure devalues a building by more than 5%, then you don't need to do that work. But you need to evidence that with a chartered valuation surveyor. You've also got a measure or an exemption around, so you've got 7-year payback, no consent, 5% devaluation. Um, mm, I may be confusing myself now with the domestic. Basically, if the improvement is going to destroy the building or have a negative impact on the structural integrity of the building, such as,
Yeah.
let's say, cavity wall insulation, that's very much a domestic exemption, or an exemption for domestic buildings. Um, but yeah, so there are get out of jail cards. Um, it's evidence based, so you do need to go through proper process, um, because there there may be some changes with EPC register in the way that the trading standards officers can check and validate, because at the moment it's self-certified. So yes, you could claim an exemption without any evidence, and nobody's really been checking it because local authorities haven't had the resources, financial resources or um, personnel resources to deal with minimum EPC enforcement. Moving forward, they could do. And
Yeah.
because the EPC exemptions last 5 years, there's plenty of time for training standards to look and check and then potentially issue a fine for non-compliance.
Yeah. Okay. And we'll talk about the valuation and lending implications in a minute, because obviously, as you just said, it's not just about your EPC. It's about whether actually you could get an exemption, but your lender, you might not get lending on it, or whatever else. And there was rumors before this was announced that because obviously if there's a commercial lease in place, and the tenant is in situ, and quiet enjoyment in the lease, etc. As you just said, like, you can't just barge in there and bundle in and take out heaters and make EPC improvements. So I presume this is still on letting rather than kind of for existing buildings, because obviously there was rumors that it might be for all buildings, and obviously that would be very challenging from a commercial perspective. But also that are there any provisions now where that there's rights to go in when it's tenanted, or have the government kind of drawn away from that? Because there was some rumors about that at one time.
I think fundamentally the EPC and minimum EPC regulations, mainly minimum EPC regulations, does not what's the word? Take precedence over other acts of Parliament legislation like Landlord and Tenant Act.
Yeah. Okay.
So yeah, and that's set out in the MEES regulations that landlords cannot just go in and take action if there is a lease in place that may be protected by the Landlord and Tenant Act. You have to work with the tenant to find a compromise or an acceptable solution that allows the landlord to meet its legal obligations under EPC standards. But I think don't forget, uh, EPCs are the triggers for an EPC is a letting or a sale or maybe even a construction of a building.
Yeah.
Minimum EPC standards is a secondary legislation. So if a bit and it first of all looks at the EPC and checks to see whether it's compliant, and if not, then you need to do something about it. So if a building does not have an EPC, because let's say the lease was started 25 years ago, and we're coming to a lease renewal, and lease renewals are outside the scope of EPCs, and so long as it is a lease renewal, the MEES doesn't come into play
Interesting.
because you don't need a new EPC for that lease renewal.
Yeah.
If, however, the lease was started, say, 5 years ago, and we're coming up to a lease renewal, and 5 years ago it should have had an EPC, then we've got a valid EPC because it's got 5 years left on that term, that validity period. Then MEES does come into play because we have an EPC registered on that building.
Yes.
And therefore, if that EPC is below standard, then need to do something. Now, it could be that it's above standard because it was done under an old set of EPC calculations where gas was good. So it might already have a compliant EPC rating.
Mm.
So I would say that if let's say you're an investor looking at acquiring a new building as a with a sitting tenant, have a look at that EPC. When was it registered? Is it under the current methodology?
Mm.
While that landlord looking at a lease renewal, then fine, you might take advantage of a EPC that's valid, but done under old calculations. You're still well within your rights to continue. And if that gives you that sort of commercial advantage that you can relet without spending capital, but at some point in the future, it's going to come and bite you in the back.
Yeah, exactly.
So it's just factoring all of that into play.
Yeah. And just put it in your numbers. If you don't need to do the work now, just make sure it's in your cash flow for
Mm,
5 years' time or whatever.
yeah,
So yeah, just think,
absolutely.
I think that's the thing is that, I mean, lots of, people who invest in commercial know this, but if you're new to commercial, it's not just a point in time that you're calculating returns. You're calculating returns over,
Mm.
5 years, 10 years. And so just make sure you've put that in your forecast for sure. And then, so just slightly pivoting onto domestic, because we've talked about it now, so we may as well carry on. So what are the exemptions? Do the existing exemptions continue on domestic EPCs, or have they changed at all?
Um, I'm not as clued up on domestic, but I'll give it a go. So I think it stays the same,
Yeah,
but there are some slight changes to each of the exemption routes. So you've got the high cost cap. So landlords at the moment have a cap of £3,500, including VAT, for energy efficient improvement works. What that
yeah,
means is if that, if let's say putting, I don't know, a new heating system into the building that will bring that EPC rating into compliance, but that cost is more than £3,500, then you don't have to do it.
yeah,
You'd have to demonstrate, again, evidence-based, get the quotations, apply, blah, blah, blah. Again, you've got a no consent. So tenant says, no, I don't really want, central heating. I'm happy with my electric panel heaters or what have
mm,
you. Okay. Um, and also planning and, listed building consent and all of those things, everything to do with you can't get permission to carry out that work. You've got the devaluation argument again.
yeah,
If improvements reduce the value by 5%, then no, don't need to do it. And you've definitely got the by implementing that energy efficiency works is going to destroy the building, like cavity wall insulation. Then no, you're not doing
yeah,
it.
yeah,
Um, but I think you touched on listed buildings. Listed buildings aren't outside the scope of EPCs, and therefore not outside the scope of minimum EPC standards. So listed buildings do require EPCs and certainly need to go through that process. It might be that the improvements would not be permissible due to the status of the building, and therefore you may not need to register that EPC.
yes, yes,
Okay.
no,
But
yeah,
you've almost got to go through that process. Your energy assessor needs to almost like record everything. You as the landlord, the investor needs to have some system to record the process and the evidence so that if it is asked of sometime in the future, then you've got some evidence to say, we've evaluated this.
yes, absolutely. And I think that there's a bit, I think a lot of people think that you don't need one. So I think that's sort of great
Mm.
clarification, because absolutely, we own a number of listed buildings and we absolutely have got EPCs on them. So
And you can, Susie, you can improve the energy efficiency of a building, of a
yeah,
listed building, change the heating, you know,
exactly.
and a lot of the heating system is not going to be part of the listing.
Yeah.
So
Yeah,
yeah.
exactly. Yeah. Okay, great. So let's go back onto non-domestic, and we'll stay there now, I think, for the rest of
Oh,
the
thank you.
podcast. You'll be pleased to hear. Um, okay, so I'd love to touch on lending and valuation,
Mm.
because I suspect it's too early to really think about this. So the RICS is probably scratching their head, because they tend to give guidance notes, don't they, eventually on when significant things like this happen. But What was your kind of, I mean, we could both give our view on this, I guess, in terms of valuation and lending. Well, what's your kind of take on, so smaller buildings, you don't need to necessarily do the EPC works, how will lenders view that? How will investors view that? How will valuers view it? Equally, like larger buildings, like what's your kind of initial thoughts? I'm appreciating that we haven't had much time to think about this, and I think lenders and valuers are probably still scratching their heads on it.
Yeah, I'd say it's a bit of a bugger's muddle, if I can say that. And you might need to edit that out. I don't know. But I think we've got a two-tier market coming down the pipe. Potentially, we've got a risk or a reality of perhaps a yield diversion. So you might have some buildings, some sectors where there's going to be some yield compression, and there'll be other areas where there's a yield expansion or stabilization. And that will all depend on, I think, perhaps, yeah, the size of the building, the type of building, what its EPC rating is, and what its value is, and what its rental income is, and where all of that sits,
Yeah,
will have an impact on how that yield behaves. Um, I think there's a lot of. I mean, the government in their announcement said, we're giving some reprieve to SME landlords, high streets, retail units, and this, that, and the other, because obviously the high street is really struggling, and therefore they think that the EPC and relaxing the requirements on energy efficiency in the high street is going to be a helping hand. Um, a lot of retail units come out with a B rating anyway, even a really crappy building, and even with no heating, because from an EPC assessment point of view, a building with no heating, the default assumption is electric fan heating. So,
yeah.
and a lot of retail units will have aircon or no heating, or electric panel heaters or fan heaters. So they actually score pretty decent. Um,
Mm.
I think, if the government was wanting to help the high street, then maybe this is going off on a different tangent, but business rates is the obvious area to support the high street. Um, I think the challenge is going to be the industrial units, where typically it's gas-fired heating systems, um, and obviously you've got a lot of carbon with that.
Yeah.
Um, yes, removing the heating from an industrial unit will improve its EPC rating, but also changing, and we've got new technology, we've got other fuels like drop-in fuels like HVO, biogas, and what have you that could be used. But you've then got to think about the practicalities of the deliveries because they're drop-in fuels as opposed to mains fed. Um, it's a halfway house, but that will improve the EPC rating,
Mm.
but also changing it to a heat pump technology. Um, so there are possibilities. It's just, what is the cost, the capex of doing that? What are the running costs of doing that? The comfort levels, you know, it all needs properly assessing and evaluating. I fear that I've gone off on a tangent. We were talking about the value of a building. Um, but if, but that all, I suppose, factors into the attractiveness, the lettability, the
Yeah, absolutely.
affordability of that building, lenders' perspectives and risk. Um, I mean, we had some of that 300 industrial units to survey before the announcement. The announcement came, and a lot of that was put on the back burner because the majority of those buildings were under 1,000 square meters, um, and and were compliant. They were above an E,
Yeah.
so they didn't need to. So before the announcement, everybody was aiming for a B. This has given us, or the market, an opportunity to reset. But how does that then have a bearing on the yields, the rental values, and so on and so forth? So yeah, very much a welcome breath of fresh air for a lot of landlords, especially rural landlords, of buildings that are off the gas grid.
Yeah. Yeah, and absolutely.
Um, but yeah, so and the cost what's obviously going to affect yields and values is the cost of improvements. So if that has been removed, then that must have a positive bearing on asset value.
Yeah. No, absolutely. I mean, I think, like I said, I think lenders are probably mulling this over. I think that um, the RICS valuers will be mulling this over at the moment. So I think it's too early to say kind of what, but I think from an investment strategic perspective, I've definitely got some thoughts on it. I mean, two-tier markets are never good. Like, it's always interesting, but they always do present opportunities as well. So there's definitely some form of opportunities in there, and obviously that will start to come out in the wash as the weeks and months go on. I mean, I think one of the biggest risks is that lenders, I think lenders at any event are, in some sectors, are giving better rates for higher EPCs and things. And I think that trend is just going to continue. So
Mm,
even if you don't need to do the EPC changes, it would always be worth finding out how much it would be cost to do that, because
mm,
you never know with governments, do you? They might actually introduce this later and you've not budgeted it on your buy strategy, and therefore, just budget it anyway. And then
mm,
if you decide to do it, you do it, or if you have to do it, you've got
mm,
the money in there and your returns reflect it. I
mm,
think in terms of buy strategy and opportunities, I think that you could have a sustainability led strategy where you only buy things where you can put solar panels on, or um, you know, or you buy things that have already got sustainability in there, and then you're just future proofed, aren't you? That might
mm,
just be a buy strategy. Um, but I think, yeah, so I think there's lots of things to think about when you're doing this, and as with everything, there's always, when problems are always opportunities. So,
mm,
but I do think that, yeah, that reprieve for smaller SMEs will be a big sigh of relief, I think, in terms of that, because I think that there was a lot of fear around that. But definitely this, even just getting pre-2022 EPCs redone, from the, if you're buying something which has got a pre-2022 EPC and just getting that redone,
mm.
that's a competitive advantage before you even started, isn't it? So
Yeah,
uh,
no, absolutely.
that's a good.
No, no, I must admit, I'm talking to a client. It's a bit of a muddle in some respects. So we've got a landlord with an existing tenant, but we've got a vendor. So we've got a purchaser looking to buy this investment, but not for the setup as it currently is. Looking at it from a redevelopment point of view, but because it's a transaction, it triggers a need for EPCs. It's an MOT garage with a dirty grey oil boiler, so that can't be ignored. It's not a particularly young building; it's an old building, so the fabric, single brick, it's going to have a poor EPC rating. The purchaser needs finance. The bank is saying, you know, bit nervous. The vendor is saying, "Well, I'll tell the tenant to remove the heating." It's like, well, that could, ex- you know, elongate the whole process. Maybe we need to deal with what we've got, and let's look at an exemption.
Yeah.
Yeah, because we know we can do those calculations very quickly to evidence the cost of improvements, and we know that the cost of improvements are going to be more than going to pay back in more than 7 years, just from experience. So purchasers spoken to the bank and said, if we did go down that meat exemption route, what's your attitude? Said, yeah, quite relaxed. So now we know that the purchaser can buy that building with a commercial mortgage. We just need to get some exemptions in place. We've just got to be careful who is applying for that exemption, because it's not transferable.
Okay. Yeah.
Okay, so
Yeah.
vendor needs to give consent to the purchaser to apply for an exemption, and you can do you don't have to own the building to register an EPC or an exemption. And this is also something just to factor in, um, for landlords, SME landlords, to make sure that their leases protect them, because anybody can register an EPC. So it's always, you know, just make sure that you're not, the EPC, you're in control of registering that EPC, and
Yes.
it reflects that building that you are letting. Otherwise, you inadvertently could become full foul of the regulations, because once an
Yeah.
EPC is registered, that's it. You
Yeah.
can't remove
Great
it.
point. So make sure your tenant can't apply for EPCs, and make sure they do nothing to,
Without landlord's consent, obviously,
yeah,
because
without that
they may
consent,
have to
and make sure they do
select.
nothing to the building that will affect the EPC. They can improve it,
Mm.
obviously, but not,
Mm.
and they're quite standard lease clauses now, aren't they? But you just need to make
They're
sure.
getting so, yeah.
Yeah. And the other thing just occurs to me as well is that if you bought a 15,000 square foot industrial unit and divided it into 2,500 square
Hmm.
units, then obviously suddenly the regime changes, doesn't it? Because you're falling below that 1,000 square meters, or does it?
And Susie, devil's in the detail. We don't know. Th- and you see, this is where we need the clarity
Yeah.
from government. And it's all well and good saying, buildings over 1,000 square meters need to get to a B. Everything else, stay on the on band E. Um, and I suppose that's one of the main considerations that we're not quite sure of, because we don't know how to advise our clients,
Mm.
But if we go back to the definition of a building and what the guidance of the EPC said back in the original guise, is that a building is defined by the regulations as having roof, walls, and uses energy to condition the indoor climate. And an EPC should reflect the accommodation being let or sold. And the third element is that where you've got a common heating system, you have a choice of either doing an EPC on the building, so a building-wide EPC, or to revert back to just the EPC for that part of the building being
Mm.
let. Okay? So you've got a choice, essentially. So that building that is multi-occupied, that's 15,000 square meters, your floor by floor is less than 1,000 square meters. You potentially could do one EPC per floor. Yes, it
Yeah.
costs more. Yes, it doesn't give you as much clarity on the energy efficiency improvement, because some of the EPCs might say replace the windows on certain floors, but you're not going to do that without doing it holistically.
Mm.
Or it might say, yes, replace the heating system. Well, I can't, because that will affect the whole building. So it could give you a distorted view by splitting the building up. But if that gets you over the line in terms of for compliance, people are going to do that,
Yeah. Absolutely. Yeah.
you know?
No,
Um,
it's a great point. So, yeah, as always with these things, the devil's always in the detail. And there's always a strategy. So don't buy a
mm,
building without your strategy in place. And so moving on from that there, Jonathan, I presume that my recommendation would be that before you buy a building, you absolutely work hand in hand with somebody like yourself to understand the building, to understand the EPC, and the art of the possible in terms of what you can and can't do. Any other recommendations of what people should be actioning now in the light of these kind of this new
mm.
guidance?
I'd say some basic checks and balances. Check the EPC register. Check that the EPC reflects the accommodation. In terms of floor area, description of the building. When was EPC registered? Does it reflect the current methodology? So is it pre-2022, post-2022? It's not going to be long before we'll be saying actually post-2027.
Yeah. Yeah.
Because that's going to be a slight change in the EPC ratings. So simple checks and balances. The EPC is as you see it, and those are things that you can do quite simply. Go onto the EPC register, www.epcregister.com, put in your postcode, have a look at that EPC. It
Mm.
will describe it. It will give it its floor area, and it will give its EPC rating. Then have a look at your lease terms, lease expiry, lease events, and tally that with EPC expiry date. because that will give you an idea of what you might need to do when you might need to do it. Have a look at your lease terms, because there may be improvements that you have to do that you might be able to recover through either a service charge or, usual lease terms. Um, I'd also factor that in with the asset value. What is the building? Where is it located? How valuable is it? What is the cost of improving it versus what is the current value post improvement value?
Mm.
So it's not just chasing the EPC grade, it's factoring it all in, proper asset management, if you will. So those are some really basic things that you can do yourself. If you want more help and assistance, then reach out to me. More than happy to help, have a conversation. Um, have a go at our MEES readiness checker, which it is a very simple answer, like a dozen questions, and you will get an EPC and MEES guide that is bespoke to you.
Yeah, fantastic. And we'll make sure that link is in the show notes for this podcast. So do check
Oh,
the show
thank you.
notes out and make sure that's in. But yeah, some great points there. I mean, I think don't be so channeled down one route on EPCs that you're affecting the lettability of a building or the capital value of it. Like as Jonathan rightly says, it's about looking at everything in the round, understanding the system so that you can work around it and work through it. But nothing is more important than your lettability, your rent, your lease terms, because ultimately that's going to form your value. But I think if done the right way, and if you buy strategically, you can actually have all that together, I would suspect. But you need to be highly strategic in the way you approach it. So fantastic, and fantastic tips there, Jonathan. And thank you so much, as always, because it's really, really useful to, I mean, I know this has been quite a long episode, but it's been really useful to kind of really delve into this, because I think it's an area that so many people don't understand particularly well. So I think, and certainly it's been really helpful for me. So people can do your check, your kind of questions, your MEES readiness
Yeah.
checker. Yeah, that's the one.
Bit of a mouthful, I know.
We'll also put your details in the show notes. But how just finish with how people can get in touch with you otherwise.
I think the simplest way is get onto our website, www.mertonandco.uk. Just fill in the contact form, and that will come through to me, and then we can contact you, book in a call, yeah. And also on our website, there'll be a button for signing up to our newsletter, and to for the MEES readiness checker as well. So yeah, website, contact forms, probably the simplest, easiest way to get in touch with me.
Perfect. Great. And do you work nationwide, or are there certain areas that you particularly deal with?
No, we have nationwide coverage. Obviously, it depends on the size of the building, the complexity of the building, but we have a network of energy assessors that we have used over the years, tried and trusted. So yeah, we can cover buildings of all shapes, sizes across the UK.
Fantastic. Brilliant. Well, thank you so much. And please do, I can't stress the importance of when you're buying or when you own a building to work with somebody like Johnny to make sure that you're doing things right. So as always, thank you so much. Really, really interesting and insightful chat with you today, Jonathan. So thank you so much. And maybe we'll see you in 2027 when things start getting refined for the next iteration of where we
Yeah,
are with our EPCs.
I was going to say we should diarise for, I would probably say early to mid 2028, because I think realistically, that's when this MEES 2031 regulations are probably going to come into force. It still needs to go through Parliament. It
Yeah.
needs to be designed, debated, and agreed.
Yeah.
So everything that we've said today, all the advice could go out the window
Yes,
if there's a change of government or a change of heart. So there's
exactly.
still a lot of time left. But I think the message, as you quite rightly said, is don't ignore it. have a look at it. It costs you nothing to take those, have those basic checks and balances.
Yeah, and we have a new prime minister, and yeah, as you say, there might be a change of government in between now and then. So all up for grabs. But I don't think, yeah, as you rightly say, nothing changes in terms of you need to look at things highly strategically, do scenario testing, and just make
Mm,
sure you've got your bases covered. Basically, that's the message, isn't it? So,
absolutely.
Jonathan, thank you so much for joining me, and thanks everyone else for listening. And I look forward to seeing you next time on the Commercial Property Podcast.
Thanks, Susie.